Hello everyone, today is March 31st, 2025, month end, so it's time for us to talk about our Robinhood Roth IRA portfolio. Now, the point of this month is every portfolio is not, it's simple as that. You'll see our value is at $15,777, which is a lot less than the month prior. So let's just get going at it. We got a lot to talk about today, so we're going to keep this moving fast. Now you'll see we have QQQM, 49.36 shares that increased slightly. We did start buying back into QQQ. We have VU for 12.13 shares and Google for 0.5014 shares. So now we officially have half a share of Google stock, which is a big improvement considering we've only been buying it here and there just a little bit at a time. At times getting a little more into it, but we'll talk about that. First, let's look at our chart. So we see today we stand at 15,777, and that's in after hours. We're down about 0.15% for the day if you're including after hours. And that comes out to about $24 lost. Look at the week. A lot is said here. You see we're down $660 in a week, which is 4%. 4% down in a week is not any small number. That's a lot of money too, especially as my portfolio continues to grow, as I continue to put more money in it. I'm realizing, yeah, the tough days, they're a little tough. And I kind of signed up for that when I had the NASDAQ 100 exposure. I knew my beta was slightly higher, so the swings and the volatility, I want to feel it more. I was totally fine with that. That's the trade-off I get because I know on the upside, when things are going crazy good, I'm going to be seeing more profit on average. That's what we're expecting. So I understand this risk. I signed up for it, and this is part of my risk tolerance. And although some days it's going to be hard to stomach, don't get me wrong, I know what I was getting into, and that helps me sleep at the end of the day. So now look at a month. Okay, not much different. Down 4.13%. It's about $680. So not very different. But now if we go to 3 months, we're going to start seeing what happens. Okay, 3 months, which is the beginning of the year. I mean, if we see year to date, it's going to be very similar. 3 months, we're down $1,200, which is 7%. Okay. So 7% for 3 months is a lot. That is definitely a lot. I mean, we talked about 4% a week and we thought that was a lot. But 7% in 3 months, that is a great decrease in our count. Now, I did want to point out some key metrics here. If we go from our high point to where we're at now, I mean, we're seeing about a 12 to 14% decrease in our portfolio value. And that does represent a pullback in the stock market, like a defined pullback over 10%. So we're actually seeing this pullback, and I kind of speculated that I felt like this was going to happen, and I guess, I mean, you keep guessing over a couple months, you're going to be true eventually, but I really did have this feeling coming along, and I said I'm fine with anywhere up to a 30% pullback in the portfolio, which is a lot, don't get me wrong. I mean, we're only at 14%, and that seems like a crazy amount, but I'm still factoring in that this could potentially only be half of it, and if this is all of it, that's great. I mean, if this is what we needed, tariffs kind of put this into play and we had a catalyst that brought the markets down, cooled everything off a little bit. Okay, and if we're at the bottom, that's amazing. But that is to say that I don't think it's necessarily the bottom. I think it could go farther down. I've been anticipating 30% at worst case, 20% more likely probably, but if 15% markets call it, fine with that definitely. And that is also to point out that if we look at QQQM, it's down a lot farther than VU, and that's just because the beta is higher. So I have 60% exposure in QQQM and about 40% in VU. So it makes sense that I'm kind of in between those 2 points. I'm not feeling the whole wrath of the NASDAQ falling and a lot of these tech stocks falling, but rather I'm in between that and the rest of the S&P 500, and I also have my small exposure in Google at the same time. So some things I just want to talk about, and I did also want to go over Robinhood making an announcement recently. Robinhood, I think they call it the Lost City of Gold. They had a whole presentation on this. So let's look at this because this is where we invest. So it's important to understand these things. And I'll show some of these in the app too. So they have a managed investing tool in the standard brokerage account now that you can open up. You state your risk tolerance, what your, time frame is going to be that you're going to have your investments going. The risk tolerance that goes with that, how much liquidity you need in this account, all those factors that you're probably used to answering, but now they're actually putting that into effect. And they open up a portfolio that you can just continually fund. You'll be able to talk with someone about, talk with the AI tool that they're developing about. Over time, they're hoping that it's just going to grow because they're going to charge 0.25% on the assets under management, which is pretty standard for robo advisories. But apparently they're saying you're going to have a little more interactivity. You're going to have a better help team than other platforms allow. And at the same time, that 0.25% is only up to $100,000 invested. And every dollar after that is fee free, which they say is revolutionary. I'm sure other places do that, but it is very competitive to other markets that will continually charge you no matter how high you go. You go to a financial advisor, you're going to get charged 1%. On mutual funds probably, and they're basically not going to pick up your phone calls, or if they do, they're not going to want to talk to you for an extended period of time. So that was cool to see, and I did set it up, and we'll look at that. Another thing is their private banking, and this is what I'm particularly interested in, because although I do have my funds in Robinhood standard brokerage account, I have a lot in my commercial bank because I need to be able to charge my bank. I need to be able to charge it for my credit card when I pay off my statements. I need to be able to charge it for my rent. Miscellaneous bills. If you need to pay with something with debit, you need to be able to charge a bank account. And I can't just charge my brokerage account. I need to move money from my brokerage to my spend account, which would be just super weird, especially because my brokerage is in short-term treasury bills. So it just wouldn't make sense. Now they're going to basically throw that all out of the equation and make their own banking side. They're changing the credit card app to Robinhood Banking, just rebranding it entirely. Credit cards going to be on there. I'm guessing they're going to move this spend card onto there off of the main Robinhood app. And they're also going to have high yield savings accounts. So I do have a lot in the standard brokerage for Robinhood. I'm going to be moving almost all that over to banking when this comes out. And I did apply for early access. Hopefully we can get it. But the point being is everything, it's going to be in one place. And I think from this, Robinhood is going to have more assets under management that they're going to get, more people using their apps, because it's becoming one ecosystem, and that's what they're trying to get at. They're trying to get everyone to bring their money in one place, because if you're banking with Robinhood, if you're taking advantage of their high yield saving account, and there's fancy net worth tool that shows you your whole net worth because you can plug in the numbers and it automatically syncs up to your Robinhood accounts, they're basically encouraging you to be in the Robinhood ecosystem. If you're going to use their bank, you're more likely to use their brokerage, you're more likely to use their Roth IRA, you're more likely to use their managed investing accounts, and any tool that they bring up. Futures, trade contracts, these are all things they profit off of. So when they bring people in their ecosystem with this banking, they hope that it's going to translate and pour over into these other sectors that they have going on. And I will be making an entire video when this bank comes out because I think it's just amazing. And yes, I'm getting just hooked up in their ecosystem, but it's because the trade value is there. I already paid for Robinhood Gold, and they're just giving me this for free on top of it. Okay, even if they raise gold price a little bit, I'm already in that value off my Roth IRA 3% match. I get the high yield savings, I get cheaper, contract trading if I want to go into that. They just give all these benefits, and simply I'm getting the value already. One more thing, there's just more value that I'm getting out of it. Simple as that. So I'm really looking forward to messing with this, making a whole video on it, and showing everyone the interface. Then they have Robinhood Cortex, which I will definitely mess with and make a video because it's going to be incredibly interesting. It's their AI investment assistant is what they call it, and it's kind of interesting with how it works. So basically they have it based off of some models, and they didn't specify which, but I'm guessing, you have ChatGPT with OpenAI, maybe DeepSeek. You're going to have probably Llama with Meta. You're going to have Google's AI agent, forget the name off the top of my head, Gemini. You're going to have Gemini also, probably. You're going to have all these amazing AI assistants that we already have out there. They're going to implement that into Robinhood, but they're also going to have a lot of their in-house development towards it, so it makes sense when evaluating stocks, and they're troubleshooting those issues right now because they want accurate information. So again, all these things are coming fall, and hopefully I get early access. Hopefully they launch these things a little earlier than like October or something, but I'm really looking forward to it. Going to be videos on it all, and I think the value proposition for Robinhood just becomes greater and greater as time goes. Okay. So that's just the banking aspect. They did a lot of other stuff with it. So we talked about the managed accounts. What we didn't talk about is they're going to have cash deliveries through their banking, which is very interesting. You don't have to go to the ATM. If you got money like that and you don't mind paying a $5 service fee, you can order for someone to DoorDash you your cash. So in the demonstration, they did a $200 withdrawal, and they had the person DoorDash them basically for $5. They tipped them 7. So, $12 every 200 is a lot of money, but the point being is you can have a large amount of cash delivered to you. So if you have ATM limits, you can't make it to the bank in time, this might be a good alternative. And I feel like in very niche situations, it's going to work. But people with a lot of money, I can see it working more often. And I mean, the delivery drivers have you sign it and everything. It's more personal than DoorDash. I don't suspect as many issues as it, but I do suspect them to run into a lot of headwinds, honestly. It's very interesting. You're having people deliver money. I mean, the chance of someone just calling it that one day and then saying, they delivered your money, forged your signature, call it all that. I can see it happening a couple times here and there, but hopefully it's just going to work better than what's expected. But I think it's more of a gag kind of thing, just get headlines here and there. But they did do it in their demonstration. It was very cool to see. Another thing they are going to add is when it comes to that managed investing, specifically, I know they're going to have projected future earnings. They don't have that right now. They don't have it implemented. And I figure they're going to work on the UI even more. But they're going to say if you put in this much and you have it in these holdings, this is what your suspected earnings will be over the decades in the future. They don't just do a simple compound interest calculator that you can look up online. They do Monte Carlo simulations, basically testing the returns of stocks potentially over the years and seeing where your portfolio will end up. Now, I did note that it is in just the managed investing, but I hope this is something that could be brought maybe over into brokerage and Roth IRA. It's going to be a lot more complicated because you have your individual stocks, you're kind of in and out of positions, but I hope that you'll have, based on your value and your holdings, that you can run Monte Carlo simulations into your future results of the account. So basically, I mean, it's a retirement account. I want to see where I'm going to end up. So if I'm in Google and VOO and QQQM based on prior results, deviation, beta, if they can calculate all that and run some Monte Carlo simulations for me, it'd save me a lot of headache because I could do that in my downtime, but it's really just not worth my time, especially I'm not getting too much more information out of it than what I already am. So hopefully they do develop that further. They did also mention that they went from 1.5 million credit card users to 2-something million this year. So that's increasing, and that they're going to just keep increasing it over this next year and just keep bringing down that credit card pool. So you've already applied for the gold card, expect that you have a higher chance of being accepted now because it seems like they kind of stalled on the process letting people in, but now they're just going to continue to let people in. So that's very cool to see. Yeah, let's see what else we got here. Another thing with the banking is that you'll be able to do your taxes from there. I don't know what they're going to charge you. As long as it's under $50, I mean, it's decently competitive. There's going to be better places for cheaper if you really don't have any tax situations. But what they're going to do is they're going to import all your brokerage firms automatically into your tax network. Now, I know when it comes to time for me to do taxes, what I hate the most is brokerage firms. When you have to deal with 1099s and that, as you say, the interest you got, you have to talk about your profit, which I don't have to talk about, luckily, because I'm just messing with my Roth IRA. But when I do have a brokerage, that's going to be incredibly useful. Saves you so much time. If all I have to do is put in a W-2 that I got from the year, that's just incredible. They're going to allow you to have direct deposit with this bank account. They showed in the demonstration that when you sign up for the account, that it's going to prompt you to change your direct deposit already. So all you have to do is press a button in the app, agree to their terms and services. You don't have to go to your work portal. I don't know how they do that. I don't know what kind of connections they got, but that is just great to see. I have a pretty good work portal, but I know some people that probably don't even know how to change a direct deposit. So if all you have to do is when you're going to Robinhood banking is just press a button and yeah, hey, maybe not this paycheck, maybe not next one, but the following one, it will be start going into this account. That's incredible. That's just ways they can bring in money. Basically, I think engineering that just saved them a lot. It's just going to bring in just buckets of money. So that's very cool to see. And the last notable thing about the banking app is that you will be able to send money to people in other countries in remittances, which is very interesting. They showed sending money to India. So it went from USD to rupees, which is pretty cool. Now, I don't know if they have to be in the Robinhood banking system. That would make sense to me. It would encourage people to have the Robinhood banking app, especially if people in other countries. But at the same time, if you can just wire funds to somebody in the banking, kind of like a Zelle connection, that could also be reasonable. But it's going to be interesting. I don't know how they're going to necessarily implement it. But I mean, I know people in Mexico, And I know when I make a trip over there, it would be nice just to be able to send money from my Robinhood banking app to somebody in Mexico and get pesos. I mean, that would just be incredibly easy. There's apps like Remitly where that's their whole business model. So if Robinhood can just circumvent it and just have that in the app, it's going to be very appealing to people with families in other countries or visiting other countries and have a foreign bank account. And I'm guessing that will probably also be tracked for tax forms too. I think that's going to be very cool. And that's one of the greatest value propositions that I don't think is being talked about, but it's just going to bring in a huge market. So enough glazing on that. I think we talked about Robinhood enough today. So let's go into a couple other things that happened. I think Palantir is worth a discussion. I talked that I don't really know what they do. Hey, still don't, but they do defense contracts with AI. The point that I wanted to talk about, if we look at their year-to-date high, they were trading at 124. They were just rocketing up, and now they're at $83. So $40 off of 120. That's about a 33% decrease from their all-time highs. And this started happening when markets started pulling back. Warren Buffett has a saying that when the market goes down, you see this downturn happening and people aren't profiting. It's not bull market, it's bear market. That you find out who's swimming naked. And I do like that saying because it is quite funny. But if you were owning Palantir, you got caught swimming naked. Hey, $120 and it was just rocketing up. Price earnings was crazy and it still is crazy. And people weren't thinking about it. They were simply just investing as everyone else was doing that. There was no valuation going on. But now we can see, hey, maybe I was getting a little carried away with. And people, I think, now have to think about it. MicroStrategy with their Bitcoin exposure, you'll see at a high, which was in November, they're at $470. Now they're trading at 285, which isn't quite 50%. It's probably about 40% down from their all-time high. This was a stock that when it was at this high, and this was when NVIDIA hype was going on too, you couldn't do wrong if you bought it. Simply, everyone called you silly for not buying it, that this thing is just going to moon to infinity. And I feel like a lot of people just kept buying it, and then bag holders happened, basically. So, again, another example of a company like Palantir, and these two often get put in discussion. I like to put them in discussion together because they were seen basically as the same in the eyes of like Wall Street bets or just the retail investor. It's these companies with incredible growth and AI exposure, Bitcoin exposure, all these trendy topics going on. But really, they're very new in what they're doing. And the earnings weren't solidified. And the PE was just getting very high. And I mean, MicroStrategy is coming down because Bitcoin price is coming down. Palantir is coming down because, hey, AI overvaluation was going on. And we saw that all across the board. So two that were interesting there. I did want to talk about NVIDIA. And I've been checking on this one every month because I did make a video on the valuation of it. If you look at year to date, it's now 21%, which this feels weird to say. If you said that a year ago, that just really wouldn't make sense. But at their all-time high, we can see they're trading at about 147, and now they're down to 107. So, I mean, not quite a 33% decrease, but pretty close, maybe 30% down from their all-time highs. And I said that fair value for NVIDIA was, I think I said about 124, 123. And I know if you look down at the Morningstar report here, they say 130. I think it shows on mobile, but Morningstar says they're at 130. So if you like NVIDIA and you're a bull on NVIDIA and you just keep making the case, and you're making the case when it was trading at 150, why not make the case now when it's trading at 107? And this is a point where I would say, hey, NVIDIA could be a buy because now it's undervalued. I did the EPS method, free cash flow of looking at the valuation. And I mean, they have the cash flows to back it up. But I do feel like there's still potential risk at future cash flows decreasing, especially with AI hype kind of finally decreasing and companies not feeling that pressure to buy the latest and greatest GPU with billions of dollars spent. So it was great to see that come back a little bit. I think I like seeing that the greed is decreasing finally. That makes me just feel more secure in my investments. Google, a company I wanted to talk about, and this one I feel the burnout because I have Google exposure, and I made a case and I said how I love this company, and quite frankly, all it's done is go down since I bought it, but that's cool, whatever, right? So if we see, we're down 16% basically in total return. If you look at their chart, we can see that their all-time high was a little over $200. We can just call it 200, and now they're trading at 153. Call it 150 because before it was at 150, it was slightly before, and that marks a 25% decrease from all-time high. Now this raises some red alarms to me. When Alphabet, Google, is down 25% from its all-time highs. There's already people advocating that Google was one of the only Mag 7s that were undervalued. Yeah, you should be looking at it for a value proposition. And this, I said, hey, Google is pretty valuable at, I think I was looking at like 180. I was like, I like this already. Now it's at 153. I've actually been trying to divert some of my funds every single week into Google more than I normally would. And granted, they're not a lot. Obviously, we're small fish right now. We're still working on building the portfolio. But the point being is practice what you're going to be doing in the future. If I'm saying I like a stock, I'm not just saying it because it's trendy. Listen, I'm seeing the valuation. I'm seeing it's below the valuation. I'm seeing these metrics increase in Google that they're, acquiring companies. They just acquired with Wiz, which is a cybersecurity company. I think that's going to play good for them. They're going to be able to offer that as a service for other companies as cybersecurity becomes a continual need, which it will become a continual need. I mean, ransomware and hackers have just become more and more common. So I think that was a great acquisition. People were hating on it because they put billions of dollars into infrastructure for their AI network. Yeah, look at that, we're in after hours, so that's great to see. But the point that I'm trying to get at is that they're making all the right steps. They're investing in all the things they need to be investing in. They have great revenue, great free cash flow, great margins on everything that are increasing. Smaller parts of the business becoming even greater parts of the business are profitable. Like Waymo, I mean, they got self-driving cars on the road already. Teslas only can say they want to do that. It's all these things that Google has going for them, and everyone just likes to look at two sides. They like to look at the Nvidias, the Teslas, because they're just more fun to talk about. Quite frankly, there's all these over-delivering promises that everyone loves to see, and that just means more potential future revenue, more potential future revenue. Why aren't you looking at the company that actually has current revenue and has pretty steady projections on future revenue that they will most likely hit because they constantly hit revenues in their reports, their quarterly reports. So I don't know. It's like people look for the trendy stuff, and I get it, right? I get it, but they're kind of looking over the obvious investments that are standing there in their face. I mean, you pull up an S&P screener, it's there. I mean, come on, why aren't we talking about Google? Why is it not in the discussion? And some people, I think, like Joseph Carlson, they're talking about Google. I think they're doing a great job on coverage through it, and I keep up on it that way too. And I like to look at news articles myself with it. I think Google is a great buy right now. Before I said it, hey, this is probably a good buy. I think it's almost obvious to buy Google right now. I'm not really advocating for too many other companies. Maybe Robinhood because I love that stock. I love the company. But I think Google is one of the most attractive buys. So I'm going to actually try to increase my investment even more, especially as I graduate kind of at the middle of next month. So we'll be working full time, put more money in this portfolio, and that means I'll be able to put more money into Google specifically. What else we got here? Yeah, okay, this one's hilarious. So look at my notes here. We got DoorDash. What's going on with DoorDash? Great you asked, because DoorDash partnered with Klarna, so you can do pay in 4 interest-free payments for your DoorDash. So, too broke to afford the Chipotle burrito bowl that they're filling halfway, you can now Klarna in 4 interest-free payments. I mean, that's like a recession indicator. I saw a lot of memes talking about like The Big Short, where they're talking about we're in a bubble. Yeah, I mean that kind of gives you the bubble feeling when everyone is, I mean, DoorDash and their food with Klarna, they're taking out small consumer debt or something like that. And granted, 4 payments is interest free, but as soon as you go past that, yeah, you're going to get smacked with fees for having a late payment. You're going to have APY 30% probably, something like that, something wild, astronomical like credit card APY. So. And a lot of people that are Klarnering their DoorDash are probably people that can't pay for it, let's be honest. Or they're going to simply forget, and that's where Klarna gets you. And Klarna is going to IPO, most likely. So when Klarna does IPO, definitely talk about that. I think it's interesting. Although they might be making money off the backs of people that simply can't afford it, they are making a decision. I think it's worthwhile to look at it. Especially if it comes in at a decent valuation. Yeah, I mean, Klarna might be an interesting buy. Yeah, I mean, that talks about most of the stocks I want to look at. I did want to bring in my mobile device right here, if we can see this. It blends in really bad at this time, so apologies for that. But something I did want to look at is SGov. We've been increasingly buying that to just get that yield back. I used the $1,000 free of margin because I'm a gold member, and that should return me 30 to 40 bucks a year. So offsets a lot of my $50 a year membership. But also what I did want to talk about, let's see if we can find here, is the prediction markets that Robinhood has been looking at. So specifically, I looked at the Fed fund rates in May. So we did have one reporting since I last talked to you guys, and we'll have another reporting in May. And basically, the position I have is that, yeah, rates will be above 4%, which is the higher of the range that they bring. So I just think it's almost a no-brainer. I mean, I looked at the odds of it happening. It's basically guaranteed. Like basically guaranteed. I did run an expected value calculation based on the profit or loss of it and the probabilities. And I mean, I think both were at least 6% in favor of the buyer. So I did have a 4.25% above that position, but I did sell it because I already had gained interest in it after the first reporting because people realized that the percentages were pretty good and the betting markets became less favorable. So I sold out of that position, bought into my S-Gov with it, and then I just had my 4% remaining open. And this will be interesting to see how it works when it does close because I haven't had to go through a closing one, but you can see that the contract resolving is the next thing. So when that actually happens, when the May one is reported, that's when it will resolve. And the payout will be on May 7th. So although it's in May 7th, that's because the reporting will be in May. I'm guessing it will take anywhere from 2 days to a week to actually get your funds after the reporting happens. So if I was sports betting, I would call this a lock, basically. So, I mean, we bought 13 at 94 cents. Basically, we're going to get 13 back at $1. So nothing too crazy. But again, practice with this kind of thing. Consistently practicing with small money. It's going to be great when I do have more money and that I actually want to get more skin in the game, I think, and take more of a calculated risk. So yeah, I mean, that's all been going great. We talked about futures last time. You can see S-Gov just dropped in price, which means I'm about to get my dividend for it also. Oh, and that does remind me that when it comes to the retirement account, that we do have dividends coming up. I'm not sure if we're able to see it down here. Yep. So we did get paid for QQQ, which will show, but we do have a $22 dividend coming from VU, that just feels great to see, especially on a down month. But if we look at QQQM, I'm not sure if we'll be able to see the recent one, but we did, yeah, right there. So we did get $15.60 from QQQM as well. So great to see. Overall portfolio has been down a lot, but I do see a lot of great coming with this lower valuation in the stock market. I think it was well deserved, quite frankly. I think we were getting ahead of ourselves a little bit. I mean, stocks were just outpacing their growth by way too much. That just doesn't make sense at the end of the day. Okay, now if we want to look at some of our charts here, kind of explains the story of the portfolio. So on the left, we got contribution in red, balance in green, and then a SPY comparison in blue. And obviously the balance and SPY comparison quickly follow each other, but it's hard to tell the difference when you're looking at this chart. So let's look over here. At our highest, which was at the end of January, we had a portfolio profit of 5,300. That dipped to 4,900 the next month, which was down $400. And now we're at 3,800. So from last month, we're down 1,100, but from all-time high, we went from 5,300 to 3,800, which is 1,500. Now, if we're going to look at our absolute portfolio high, we're probably down about $2,000. So kind of says where we're at right now. You can see the difference. In this, at first, I was in just M1 Finance, target date fund, and that was kind of screwing me. And I looked at it, I'm like, hey, I'm going to do what I want, basically. Went out of that, and I started getting this QQQ exposure. Made a pullback from being lower than the S&P. I mean, look at our worst case. We're down $300 from the S&P. I don't know what we were doing at that time. Tweaking, apparently. I mean, we broke even if we want to look at the beginning of 2023, and we were above S&P for a while here. And just recently, we actually did fall below it. So now we're technically underperforming the S&P by $51. And the reason for this is tech stocks have been getting the brunt of everything. And that's what's in the NASDAQ 100. So if I'm 60% in tech stocks, and that's doing way worse than the S&P, it's going to make sense that I'm underperforming. So that's fine with me, especially as I see this to be a point of buying. I'm going to focus on QQQM again and Google especially. Work on building those ones up. If we look at our positions here, we can see a couple things. So one thing, we have our 4.25 and above Fed rate contract that we did sell out of. So we spent $8. Let's see here. Cost base was 75 cents each. We made 0.25 off it. Okay, so we made a quarter. We made a quarter off of it, right? But the point being that I made 3% in 2 days of holding it just by looking at the arbitrage of it, basically. And again, this is playing with small money to get ready when I'm in the big leagues and I can have more money to play around with. So again, very small money, but it's fun to mess with. I got to use my stats grid finally. So we're going to keep working with that. And I think in the coming year, we're going to have some bigger bets that I might make my own videos on. I mean, I could have made a video on this Fed bet. I think it was a really obvious value proposition. And I mean, you could buy 4.25 or buy 4. And in both cases, you were looking at positive EV, which is something gamblers would want, sports bettors would want. So it was something very new. And I think as these markets are newer, we're going to see favorable buys. Okay. We have our values here, QQQM at 9,500, VU at 6,200, Google at $77, which is half a share. We love to see that. I mean, we can look at the profit here. If we look at the total profit, we're still up about $3,800 in the portfolio. Okay, so I've been in this for about 4 years now, and I've been up $3,800. And this is after the big market sell-off. This is why I don't really worry. I mean, I went through no growth at the beginning, crazy growth, and then a pullback on growth, right? So I've seen it all, basically. I'm fine with that. I'm at $3,800 profit. Now, this could go to zero. Maybe zero would hurt a little bit, let's be honest. Okay, but if it went down to like 1,800, 2,000, I'll be fine with that. Like, and that's kind of estimating my 30% pullback from all-time highs. So I would be fine with that. But the point being, I'm still up $3,800 off of what I've invested in this account. I got nothing to worry about. I mean, I'm super young. I'm going to be throwing even more money in it this year. I'm going to be maxing my Roth IRA out. So I'm feeling pretty good about this. Look at our pie chart here. You can see that Google is growing at a percentage. I mean, before it was only 0.1%. Now we're at 0.5%. And it might seem like nothing, but it's not nothing because the portfolio keeps increasing. So if I can get Google to be a larger and larger share, I'm liking it. I don't want any investment to be over 5%. I think that's a pretty good rule for diversifying your investments. So keep Google below 5% is the goal. VU is at 39.3%. Together these make 39.8%. And the remaining is QQQM. Now I talked about wanting a 40-60 split between my VU and Google position and then my QQQM. I think we're about hitting that. A lot of this self-adjusted when QQQ went down and VU didn't go down as much. I think we're at a pretty balanced point, and I've been kind of trying to get back to this. I had higher 60s, maybe even 70 at one point in QQQM. So I'm feeling really good now. And now at this point, I'm going to focus on what I see more value in. Am I seeing more value in the S&P? Am I seeing more value in the QQQ? Right now, I'm seeing more value in the QQQ, quite frankly. That and Google. So those two positions, I'm going to focus on putting more of my contributions into. In VU, it will still get my weekly contributions, but not nearly as much. So maybe put $10 in VU, and then the rest of the 75% into Google and QQQM, focusing a little more on Google. Maybe $10 on Google, so 10 VU, 10 Google, and then 23 on QQQM because I put in 43 a week. I think that's a pretty good plan moving forward. So if you guys have any opinions on that, let me know, but I am feeling pretty confident about that. And then here, if we look at our just overall really bare bone, we put in $12,000 into account. We're at $15,838, profit at $3,792, 31.49, 31.5% basically. So I think that's about all that we have for the video. A lot went down. We talked about a lot, and I tried to go fast through it, but not too fast. I think we're going to make some individual videos coming up after my graduation when I have the time. But thank you all for watching. I really do appreciate it. I'm hoping next month, maybe a little bit of a rebound will feel good, but we'll see. I mean, further pullback, maybe more people watch a video, so that'll benefit me too. But nevertheless, thank you guys for watching. I really do appreciate it. Like the video, subscribe, show your friends, comment on it. I mean, disagree with me. I would love to talk about these things, but if you agree, just let me know. Throw a comment down below. Otherwise, any other thoughts are more than welcome. So, thank you for watching the video, and make sure to tune in to the next one.